All right, good morning, everybody. Welcome back to the Morning Market Mixer from TradeThirsty. This is part of the March Madness event that TradeThirsty is running. We'll be running it for the whole of March, Monday to Thursday at this time, 10 a.m. Eastern, every day, Monday to Thursday. For you guys that haven't met me yet, my name is Russell Barbour. I began trading in 2012 and basically started trading to get out of student loan debt. But unfortunately, things didn't go so well, and I lost $20,000 pretty quickly chasing the market. After that, I spent years over trading, oversizing, trying to be right. I found that wasn't just the key to success. Really, the key to success was consistency, mechanical rules, and disciplined position sizing. So that really helped me become a profitable trader. These days, the thing that really helps me, and has been really the key to my success, is just trading SPY options. So trading SPY options, in particular, 0 DTE SPY options with just one quality setup every single day with very well-defined entries, exits, and really strong risk management. You got to be very careful with these 0 DTE trades. Here's some of the resources and tools that I use every day, TradingView being one of the most popular platforms for charting. Hopefully you guys are all familiar with TradingView. It is awesome. It's my favorite and only charting program that I use. It's really fantastic. I look at earningshub.com for earning news. There's nothing really on today much. I think Adobe's reporting at some point. Shouldn't move the market much at all though. SPY levels, I use my own proprietary system and also barchart.com. And we have a cheat sheet at tradethirsty.com/MMM, which we can share with you right now. If you want to scan that QR code, you'll get the cheat sheet. I'll also post the URL in the chat right here as well. So tradethirsty.com/MMM. So there's the link. Let's actually go and look at the cheat sheet for a second here and just kind of go through the strategy that we are using in this session. So first off, if people that don't really trade 0 DTEs, it stands for 0 days to expiration. So these are options contracts that expire the same day that they're traded. You want to use them to capitalize on short-term price movements, all within a single trading session. They're much cheaper than longer dated options, so they allow people with small accounts to really capitalize on the fact that they're much cheaper. We do have time decay to worry about though, so it means you have to be quick in and out of a trade. So I tend to scalp the market rather than sitting there for hours waiting for the market to move in the right direction. So all 0 DTE is intraday trading. Basically, it's usually a few minutes, maybe 2 minutes, 5 minutes on that kind of approach, sometimes up to 20 minutes, but generally try and be in and out of the market pretty quickly. And so these are opening range breakout trades that I try and do around this time every morning. And hopefully we'll have a trade in a little bit here as a demonstration of this strategy. It's a very common strategy. It's basically an orb strategy or opening range breakout. So I start my preparation just before the session, looking at the highs and lows of the levels. I look at VWAP, key support and resistance. I look at any news, which we'll talk about. There's not a lot going on today, but look at news and opening volatility and things like the expected move. And obviously I mark up the 30-minute chart with the 30-minute range. So on that first 30-minute candle, that's what I use for the opening range for this strategy. I found that to work the best. And so if we have a tight range, it tends to suggest a possible trend day. If it's a large opening range, percentage-wise, it tends to be a very choppy day. So it's always good to know when you're taking these trades. And so I look at things like VWAP as well, although it's not as important. What is most important is basically trading like a sniper. So looking for the highest probability setups. I was telling people in the chat yesterday that I try and find a reason not to take the trade rather than forcing the trade is usually what I found to be the most effective. And I think most people that are successful traders would agree that trying to find the absolute best setup is the way to go. So I have very strict risk management rules. We'll talk about that if we take a trade in a little bit here. So I do skip trades if there's heavy chops. So I'm more nervous about taking trades if there's a wide opening range, for example, or if there's not confluence between some of my indicator systems within the opening range. So yeah, so definitely check out the sheet there. It's pretty self-explanatory, but you've got that QR code to check out right here, and also the URL in the chat as well. All right, let's get going. So I wanted to do a quick SPY overview. Most people know what the SPY is. It's obviously an exchange traded fund, or ETF. It tracks 503 stocks across 11 sectors, obviously tracks S&P 500. This makes it really good for a lot of reasons. You don't have to worry about things like earnings news on individual stocks, and it saves you a lot of time having to scan. If you're just trading SPY, it can be a much easier way than scanning for tickers and worrying about individual ticker news or earnings or any halts or surprises like that. And that's important when you're trading zero DTE. You need that liquidity as well, so you want to have high liquidity so you can get good execution on zero DTE. Also, SPY is one of the few tickers that has daily zero DTE, so if you want to take a single trade like I do every single day, the SPY offers that really nicely. It was launched in 1993, first ever US ETF listed. And like I said, liquidity is extremely high. It's among the most traded ETFs in the world. So what we're going to talk about today, well, we're going to do our usual. We're going to go through the single trade that I usually do. The SPY ATM Alert is a premium service that I run. And it's a single trade at 10:30 Eastern time. And it's a premium service. And I usually recap the days before trade so you guys can see how it worked out. We're going to go through any overnight market news, any earnings, and any data or anything you have to worry about for the market today. We're going to look at the market direction using the opening range, EMAs, VWAP. We're going to look at key intraday levels on SPY. We're going to look at the volatility and the expected moves, and then look for any trading opportunities if there is any. There's only been one so far in the last couple of weeks, just because the timing of the session makes it quite difficult. You only have half an hour to really figure out if there's going to be a trade or not. Hopefully there has been trades afterwards though, so I have taken some trades after we've finished this session, and hopefully you guys that have been watching and like the strategy have been able to take some of the trades after we finish this session. So here's the SPY ATM Alert recap from yesterday. Like I said, this is our trade that comes out at 10:30 Eastern time daily. Yesterday it was a put alert, and so it came out when SPY was 676.15. The strike price of the put that we took was 677. Entry price was 259. And basically we put in an OCO order to take profit at 311 and to stop at 156. And the reason we do that is it has to be extremely mechanical. It's really the only way to trade these zero DTEs, in my opinion and experience, is to have an OCO order in so that you aren't just letting your emotions dictate your trade management. And so you can see on the right there, that's when we entered at 10:30 Eastern time, start of that light arrow. And then we went straight down on the 1 minute chart for 3 or 4 minutes and just took profit for 20%. So really just base hits over and over again. I call it 20% in 20 minutes, although realistically it's 20% in 5 minutes usually. 20% in 20 minutes just has a nicer ring to it, and sometimes the trades do last as long as 20 minutes. So that's what happened yesterday. We've got another trade coming out at 10:30 in that service, and it's fantastic. So let's get started on some of the news from overnight. Really, there's not a lot today. So normally we have quite a bit to talk about here. You can see how bare the slide looks today. So we had initial jobless claims this morning at 8:30 Eastern time. They remained low at 213,000 for the week ending March 7th. And this reflects a stable labor market with minimal layoffs. So the market really didn't react to that at all. It can react pretty aggressively to it, but today it really didn't have much influence. I think the biggest influence on the market now is oil. So oil spiked to $100 last night, and that was due to attacks on oil tankers in the Gulf. And so this is really what's dominating the market at the moment. Smaller things like jobless claims really aren't doing much compared to the news out of Iran. And so that caused the market to drop about 0.3% pre-market. Like I said earlier, there's no major earnings. I think Adobe reports. It's either reported pre-market or after hours, I'm not sure. But it really doesn't matter too much. It's not going to move SPY in any significant way. So yeah. All right, let's look at the market at the moment. We've had a bit of a down day so far. At least it was when I was preparing for this session. I'm assuming it's very similar. And 670s where SPY's at the moment. We're still below the 50 SMA and the 100 SMA. We did gap down. We're still in that near-term risk-off environment. We're back to old support on December 17th, and VIX is around 26, which is still pretty elevated. So let's look at the chart on the daily for SPY. So here's the daily. You can see all the lines on the right here that I've left from yesterday and then from today, which we'll zoom in on in just a little bit here. So here's what we're looking at. We're looking at the fact that we're below the green and the orange. So that's the 50 and the 100-day moving average. We're below that, and we have been for the last 4 days, all the way back to here. We've been below the 50-day for a significant period of time. And it doesn't take much to see this choppy downtrend. It's just coming down from the left to the right here. Very choppy, as you'd expect with all this random news coming out of Iran. So very choppy downtrend. What's a little bit interesting is the 50-day is starting to curl down. And so that's obviously the first one to react to this downwards trend. So we're starting to see the 50-day curl down a little bit towards the 100-day, which obviously is quite bearish, especially if they end up crossing. You'll have a death cross, as it's called. Who knows if that's going to happen or not. Maybe we see a bounce back up. But I'm pretty bearish on the market in general at the moment. I think a lot of people are. It's not looking really that fantastic, especially since we broke this key support at 676. You can see these little candles all the way back here. And today in particular, we're back down to December 17th, this candle over here. We're back down to that support around 671.5. So we broke down below that significantly in the first half hour of trading. And now we're back up towards the bottom of this candle right here. So this could signify the start of a breakdown, that being one of the key levels on the daily chart here to keep an eye on for sure. If we do break that, we're talking about down to 666. That's quite the number, 666. And then all the way back down to the 200 moving average below 660, which is possible if we have any escalation in Iran and the Iran conflict. Be a possibility. So I'm still bearish on the market. Obviously, we're getting quite large chop intraday. And let's zoom in on the 30-minute chart here and see what the opening range was like this morning. So slightly changed since I marked it up. It's about a 0.5% opening range, which still suggests kind of a trend day. It's more likely at least. And so that's the first 30-minute candle, this big red candle. You can see we're getting it all back though in the second 30 minutes. We're halfway through the second 30 minutes here. And we're getting a lot of it back on this candle coming in right here. So at the moment, we're more close to the top of the opening range. Let's just zoom out a little bit here. Mark the expected moves as well. They're quite far away at the moment. Expected move is it's about average for the day. The premiums are slightly inflated due to the VIX being a little bit higher in this bearish price action, but nothing too extreme. So let's keep dropping down on the time frames here. Let's drop down to the 5 minutes. Here we go. So looking at the 5 minute, which is the chart I try and use for trades, it's right here. So we put this on. So let's look at VIX while we're waiting for that to do something. So VIX is sort of a little bit of a curl up again here. See how that plays out. But all it takes is one oil tanker to be hit, and this thing will spike even more. So yeah, it's pretty interesting. All right, so at the moment it's looking like it's more likely to be a breakout to the upside on the 5 minute chart here. Let's look at the key SRX levels that I use to see if there's any potential support or resistance that we need to be concerned about. So yeah, there's a little bit of resistance. If we look at this red line, this looks like a mess, but it looks a bit better when you zoom in here. So you can see the support S1 right here, and then the line for the top of the opening range. This is what concerns me whenever there's a resistance level with these options. These are derived from the options chain in a very sophisticated way. It takes a lot of calculation power to actually put these together, and so I trust them a lot. They're very solid levels, and so it always worries me when one is so close to the top of the opening range. If we're looking for an opening range breakout, basically, if we do see one, I would be taking profits pretty quickly in case we get a rejection from R1 there, the resistance line in red. So it's something to be aware of. You can see the numbers here. 672 is roughly where this first resistance is. The top of the opening range is 671.6. So really, we're only talking about a 0.5 move that's possible to the upside. Not possible, but likely. So that's looking a little bit weak for a trade to the upside. This looks a bit better. Well, not really, actually. Zooming in here, we have an overlap with the opening range down here at 668. So this is showing that there's likely going to be quite a bit of support at 668 down here as well. The other interesting thing is we actually have a key level at 667 or 670 right here, right in the middle of the opening range. This is also a bad sign for today for taking a trade, because if we come down here and just find support at this level, we're going to stay in the middle of the opening range, which is a real pain for taking any of these opening range trades. So the moment it's looking a little bit difficult to take a trade with this strategy. So just kind of watch the price action, go down for 1 minute and see what's going on here. I'm going to get rid of the EMAs here. We don't need them. The MAs, moving average, instead VWAP in here. So the blue line is VWAP right there. So we're at VWAP at the moment. So things are getting a little bit hectic. You see the yellow dots? That's also the pre-market low as well, which is often a line that's which is respected as well. You can see we kind of trended along the pre-market low here. We're back to that point again. So the moment right in the middle of the opening range with these key levels here, we could just see some sideways chop, which is a little frustrating, but it is what it is. As usual, I'll give it a few minutes to see if a direction can be picked. If not, then just call it a day. This is the worst possible scenario. We're right in the middle of the opening range with key levels offering support and resistance. Just encouraging us to go sideways like we've been doing since 10 o'clock. A little bit of work. All right, we're interacting with one of the key levels, S1 at the moment. We'll see if that gets a breakdown. Or if it gets a proper breakdown, we'll keep watching for the next move down to S2 and the bottom of the opening range. You can see previously, though, it's wicked into here 3 times already and been rejected. This is looking a little bit more solid on the 1 minute at least. So this is a signal that comes up on my charts. It's a break of the 8 EMA. So it looks like we are breaking this S1. It comes up when we get a solid break when we're below the 8 EMA. This signal back here was a break and retest. That's what BNR means. So it broke up through this S1, came back down, found support at it, and then trended up. So break, retest, and then back to the upside. Not a huge move, but it worked out reasonably well. Just trying to be patient here and see. Could be more than 5 or 10 minutes before we see any move to the downside. We really have to print a few big red candles at this point to get there within this short session. I'm just going to start looking at the options chain just in case we get those red candles. Looking at today's 0DTE, obviously, premiums are a little bit inflated, but not that bad. Not too bad. They're about $200 for a contract. So 250 maybe for the 670s. Gonna look at where we're at price-wise. So probably do the cheaper 669 puts if it gets down and gets to that point. So I'm just going to get those loaded up so I'm prepared if we do get a break to the downside. I use Thinkorswim for this. Use Active Trader with OCO orders. It's a fantastic system. It really is. Makes trading much easier. So I have a stop loss of 20% and a take profit of 20%, although I'll often take the profit down to 10%. So for about half the position, I'll take 10% profits, and then I'll set my stop loss to break even so that it's a kind of a free trade after that. All right, we're heading down here. This is going to be, this S2 in the bottom of the opening range is going to be the crux, though, whether we can actually break down through there or not. S1 went down fairly quickly, so we'll see if S2 does as well. See how we got support here, though, at S2 earlier for a few candles on the 1 minute here. Say hi in the comments. I see there's a few people watching. Always interested to know if people are getting any value from this or if you have any questions. It's a good time to have a chat while we're waiting for the market to do its thing. Hey, Dang Dang. Good morning to you as well. Yeah, kind of slow. Not the easiest strategy to time for a live session like this, I have to say. If we just chop sideways and just sit there watching it, it's a little bit frustrating. What usually happens is it ends up breaking down after I finish at 10:30. It'll break down through here, or it'll bounce and go all the way back up, and 10 minutes later we'll have a breakout to the upside. It's happened several times. This signal worked out well, this break of the 8 EMA and S1 though. Should have probably taken that as the trade, right? Trying to follow the opening range breakout strategy though. Yeah, so a bit of a gap up on VIX this morning and trending up. We got a couple of minutes, so we don't see a move down here. It's not going to be. It's not going to be in trading time. But I'll keep watching it after we finish, see if we get that breakdown or a breakout in a little bit here. Let's look at the 5 minutes, see what that's looking like now. 65. And I hide the SRX levels. They're just complicating things at this point. We know where they're at, right? They're at the bottom. S2 is at the bottom of the opening range, and we're just at the S1. All right. Well, I think I'm going to call it a day at that. We're not really moving much at all. We'll keep an eye on it as the next half hour goes and see if we can break down through the bottom of the opening range. And it's Thursday, so I guess I won't see you guys again until Monday. So the reminder here is we are live Monday to Thursday, 10 a.m. Eastern time, entire month of March, and you can grab that cheat sheet at TradeThirsty.com/MMM or scan the QR code that's down the bottom left of your screen. All right, guys. Well, hopefully we get a breakout of the opening range in a little bit here.